Welcome to another Monday Market Update with Kristen Mason Coreas, owner of the Homes of A Mason team. I don't exactly sound like myself when I hear my voice right now. I am recovering from a cold, so I feel much, much better. But I do have a beverage here in case I have a coughing attack, which does still sometimes happen. So let's try to get through this without that, hopefully. Today's Monday, April 28th. Holy cow, it's the last April and Monday. Well, how did that happen? I don't know. So let's talk about what's happening. Interest rates have stayed relatively stable. We are up a touch from our 4-week and year average. So this is as of last Thursday, 6.81. So just below 7%. The good news, we always like to look at the silver lining here at Homes by Mason. So the good news is we're below 7, which last year, so we're down from where we were last year, still 0.36. I believe we were above 7 at this time last year. So while we are above where we've been more recently, we are below where we were last year, just below 7%. And that it's then relatively stable. So that's another point of good news, is that over the last couple of months, the 30-year fixed mortgage has fluctuated less than 20 basis points. So this stability provides some level of certainty, which is a good thing to have, especially in an environment when there's a lot of uncertainty in a lot of other areas. So it's nice to kind of know what to expect and not be wondering, if it's here, there, everywhere, up and down and everywhere, kind of like the tariffs are on, tariffs are off. So at least people can plan relatively around where interest rates are and plan accordingly. And actually, we are seeing, and may or may not have mentioned this, I think I have, that we are seeing more people considering adjustable rate mortgages these days because interest rates are a little bit higher. The expectation is they'll probably come down later. So if you get an adjustable rate mortgage, that gives you a lower payment going into your mortgage right now. And then when your mortgage adjusts, if interest rates are lower at that time, you'll actually get a lower interest rate. So it could be a win-win situation if that happens. In national economic news, as of April 25th, this is where we start talking about uncertainty. So the Fed, due to trade uncertainty, especially around tariffs, has reported that outlooks across several U.S. regions have come down. No one really knows what to expect. I think a lot of people out there are just waiting and watching. And even just on the street, that's what I'm hearing people say. We're just going to wait and see what happens. So because of the uncertainty. In other news, there is some better news than what we've been anticipating. Durable goods orders did go up in March, and that they're speculating maybe as a rush to buy big ticket items before tariffs. So we might see goods purchasing of goods go down if prices go up. So we'll see if that happens. And also jobless claims only rose slightly. Sorry. The labor market has been relatively steady as well, despite expectations, despite layoffs and tariff uncertainties. So that's also been good news. I speculate that is because a lot of people who are getting RIF'd are still getting paid for a few months. So I think we're going to see the larger impact of the layoffs in a few months to come, when people are actually off the payroll of the federal government at that time, and if they have not been able to find another job by then. Existing home sales surprised, sorry, I'm a little bit all over the place today. Like the economic environment is all over the place. This is actually not surprising news that existing home sales fell 6% in March, which was the largest monthly drop since November of 2022. So this is not really a surprise to me, again, because of so much uncertainty, because of layoffs. It does not surprise me to see buyer activity going down, and I have been seeing that in our hyperlocal data, which I do share at the end of every Monday market update. In the Mid-Atlantic region, which includes Virginia, DC, Maryland, Pennsylvania, West Virginia, Delaware, and New Jersey, listings are up. So both active inventory and new listings are higher than they have been, and actually After 9 straight weeks of growth, active inventory actually was flat. So that was, sorry, I wasn't sure if I'd get through. So in general, inventory is up, active inventory and new listings. And therefore, prices may change. If supply goes up and demand goes down, that may have a downward pressure on prices. However, we've not yet seen that. So currently, list prices do remain stable. However, with the changes going on, it is recommended, and I am recommending to my sellers, that we be strategic with pricing, be aware of what is happening in the market, and maybe price a little more conservatively, because it is possible prices are going to start coming down as a result of increase in inventory and the decrease in buyer activity that we're starting to see. In specifically the larger DC metro area, as of the end of last week, so this did include Easter and the end of Fairfax County spring break is the data that we're looking at here. So therefore, showings were down compared to the year before and the week before. That's, not surprising to see less activity due to those two factors. Purchase contracts were down both year over year and week over week, and time to contract flat week over week, 3 days longer compared to the year before. New listings flat compared to the year before and down from the week before. Active listings up by almost 44% from the year before and flat from the week before. Price up a touch, almost 4% from last year and up 2.5% from the week before. So while most things were down, listing price was up. So that tracks with what we saw in the Mid-Atlantic region, that so far we are not seeing those prices coming down, and that may change. Oh, my red arrows I need to fix. Sorry. So I did not do that before I came on, so my red arrows might actually not be lined up today. But let's look at this as our hyper local data. So this is the data that we run at Homes by Mason, specifically for Arlington, Alexandria, Fairfax, and Falls Church. And this data is the most current. It's as of last Monday, so after Easter, after spring break, until yesterday is the data that we're looking at here. So new listings, and this was a pretty healthy week. And so let's see where my arrow is. It's a little bit off. New listings, can I move it? Oops, no, I can't move it. Are up to 732 compared to 610 the week before. So that makes sense to be up from the week before, which was Easter and spring break, 20% compared to the week before. And then compared to the year before, up by 55%. So that tracks with the trends that we've been seeing with inventory increasing. And contracts were also up week over week, 369 compared to 225. And that was a 64% increase from the week before. So that's, again, a relatively healthy week and good news. Also, relatively good news here is that the year over year comparison of contracts only down by just about 10% compared to, if you see here in the previous weeks, we were looking at 40 to 80% that one week. So we have been down a lot year over year in terms of contracts. So I like this number. To me, this was a better number to be at only just about 10% there year over year for new contracts. And then the last number that I like to look at here is the demand to supply ratio. So compared to how many listings came on the market and how many new contracts were written, how much supply was left over. So about 50%. Again, that's a higher number than we have been seeing in recent weeks. So to me, this was a little bit of a reprieve from what we had been seeing in terms of decrease is what I was seeing in terms of buyer activity. So after spring break, a better week. I'm happy to see that. And that is your Monday market update for today, April 28th. Thank you for watching. And if you ever want to talk about what is happening in the market specifically in your little neighborhood and or how it impacts you and whatever decisions you need to make for your family regarding your real estate, please reach out anytime. You can call me or text me at 571-210-1866. And you can click down below. There's a link actually to schedule a time to get on my calendar. So thanks for watching. Have a great week, and I will be back here next week again. Take care.